Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Fed stands pat on interest rates, defying pressure from the Trump administration.
We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Philippine first quarter GDP out at the top of the hour, likely to reveal faster growth. Business World's polls citing cooling inflation and faster government spending ahead of the election ban. Sun Life Investment Management and Trust Corp President Mike Enriquez joins us live. Strong consumer lending lift revenues at East West Banking Corporation in the first quarter. We speak with Jerry Ngo, CEO of East West Bank. The U.S. Federal Reserve has kept interest rates unchanged for the third meeting in a row amid uncertainties brought about by President Donald Trump's tariffs. The Fed held rates at 4.25% to 4.5%. The rates have been in place since December 2024 after the Fed cut them thrice in the second half of last year. Fed Chair Jerome Powell has been under pressure from Trump to ease rates in response to the potential economic slowdown as a result of the levies. But Powell invoked his wait-and-see approach 11 times to underscore that the Fed is in no position to respond preemptively to early signs that the U.S. economy is weakening. So far, U.S. GDP has contracted in the first quarter of the year, though the jobs market remains solid and inflation still manageable. Powell warned that the current level of tariffs could result in higher unemployment and higher inflation.
If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is.
Here at home, the Bangko Sentral ng Pilipinas may cut interest rates by up to 75 basis points this year as inflation continued to ease. That's according to Bangko Sentral Governor Eli Remolona. In a message to Bloomberg, Remolona said the move is quote-unquote on the table. The BSP has been signaling readiness to ease policy following last month's 25 basis point cut to support the economy amid global uncertainty. Remolona also said the peso's strength against the dollar has given the Monetary Board more leeway for further easing, adding that intervention to curb its appreciation is unlikely. The BSP's Monetary Board will next meet on June 19th. Analysts are growing more optimistic about inflation and now see room for the Bangko Sentral to cut interest rates, possibly sooner and deeper than expected. This comes after headline inflation slowed to 1.4% in April, the lowest since November 2019, and within the Bangko Sentral's 1.3 to 2.1% forecast range for the month. A Business World report says the slowdown prompted economists to revise their forecasts. Nomura economists Yuben Paracuellas and Nabila Amani now expect inflation to average 1.8% in 2025 and 2.7% in 2026. They also see the BSP delivering another 75 basis points of rate cuts this year, bringing total cuts to 175 basis points. They assign a high likelihood to a 25 basis point cut in the June 19 meeting with a terminal rate of 4.75%. HSBC's Aris Takanay echoed the dovish outlook, saying subdued price pressures give the Bangko Sentral ample room to support growth and encourage household spending. For his part, BPI lead economist June Neri said disinflation has reduced pressure on households, but he warned against cutting rates too aggressively, citing potential shifts in U.S. Fed policy. Meanwhile, Moody's Analytics' Sarah Tan said inflation is likely to stay near the lower end of the BSP's 2 to 4% target in 2025 because of strong food supply, tariff adjustments, and weak global trade. She expects at least one more 25 basis point cut in the second half of 2025. And in just a few moments, the Philippine Statistics Authority will release the Philippines' first quarter GDP figures. Economists closely watching, with a Business World poll of 15 analysts pointing to a 5.8% growth for the January to March period. That's an improvement from the 5.3% recorded in the fourth quarter of 2024, but still shy of the government's 6 to 8% full-year target. Analysts credit easing inflation, higher government spending ahead of the election ban on the release of public funds, and the lower interest rates for the likely uptick. But global trade tensions and a wider trade deficit may have weighed on growth. So how will the data hold up forecasts? The official numbers are coming up shortly at 10 a.m. Manila time. The national government's outstanding debt rose to a new record of over 16 trillion pesos as of March, up by 0.3% and nearly 12% higher year on year. The Bureau of Treasury says the debt remains manageable, crediting strong revenue collections that have allowed the government to fund priority programs without new taxes. Nearly 70% of the debt came from domestic sources, reflecting a prudent mix to mitigate external risks. The Treasury Department says 91.5% of debt has fixed rates and over 80% is long-term, shielding the country from global market volatility. The government expects debt to reach over 17 trillion pesos by the end of 2025, but maintains its goal to reduce the debt-to-GDP ratio to below 60% by 2028. East West Banking Corporation booked a net income of 1.8 billion pesos in the first quarter, backed by strong revenue growth linked to its consumer lending business. Looking at the technicals, East West Banking shares appear poised to maintain its upward momentum and extend its ongoing bull run, says Ron Acoba of Trading Edge. This follows a breakout from what he calls a multi-year cup and handle formation. The stock recently exceeded a key resistance level, setting a new 4-year high. And Acoba says EW may continue its upward trajectory, potentially targeting a measured move toward 13.30 per share. Well, with us now for more, Jerry Ngo, the CEO of East West Banking Corporation, joining us after this break. Money Talks. I'm Cathy Yang. The country's gross international reserves dipped in April, according to the latest figures by the Bangko Sentral ng Pilipinas. Preliminary data show the country's GIR settled to $104.6 billion in April, down from $106.7 billion in March. The BSP attributed the decrease to the government's drawdowns on its foreign currency deposits with the central bank to meet external debt obligations and pay for various expenditures. The central bank's net foreign exchange operations also contributed to the decline. Despite this, the BSP assures a robust external liquidity buffer equivalent to 7.2 months' worth of imports of goods and payments of services and primary income. China's new stimulus measures to bolster its domestic economy seen as a tactical step ahead of trade talks with the U.S. Analysts say China is injecting support to its struggling economy in order to gain leverage in the talks set to take place in Switzerland this week. Beijing is already feeling the pain of the triple-digit tariffs imposed by the U.S. Factory activity in April contracted at its fastest pace in 16 months. Concerns already loom over the import of taxes on China's job market and on the already strong deflationary pressures in the country as exporters lose their biggest customer. The People's Bank of China lowered interest rates by 10 basis points and eased reverse requirement ratio by 50 basis points. The Fed's decision to hold rates lifted U.S. markets yesterday, Wednesday. The Dow rose 0.7%, S&P 500 climbed by 0.4%, and the Nasdaq was up by over 0.25%. The 10-year Treasury yield settled lower to 4.27% from the previous close of 4.3%. Gold prices ended the session also lower, $3,381 per troy ounce. Let's take a look at U.S. futures, pointing to slight losses when the markets open later tonight, Manila time. The Dow and the S&P down by 0.1%, and the Nasdaq falls by less than 0.1%. Asian markets are mixed in the first hour of trading. Australia's ASX 200 is down by 0.1%. South Korea's Kospi up by over 0.33%, and Japan's Nikkei 225 rises by 0.2%. Let's get ahead with East West Banking Corporation now and speak with the CEO, Jerry Ngo, joining us live. Thank you so much for being with us. So good to see you, Jerry. I can't quite hear you yet, but first up, what do you make of the Fed's decision today and how it may impact the interest rate differentials that we have with the Bangko Sentral's key rate?
Well, thank you.
We're going to fix your audio in just a moment, Jerry. Do apologize for that. But we'll get back to you as soon as we sort things out. Let's take a quick check in the Philippine markets first and see how they're going in the first 13 minutes of trading. PSEI is opening this Thursday higher by about 0.1% at 6,474. Stock market gained by nearly 0.75% this Wednesday. As for the Philippine peso, it opens today slightly weaker at 55.50 to the dollar. Peso on Wednesday climbed to its strongest since March 2024, closing at 55.39 against the greenback. Bangko Sentral Governor Eli Remolona told Bloomberg Wednesday the central bank is unlikely to intervene to curb the strength in the peso, describing it as a story of dollar weakness. This as central banks in Taiwan and Hong Kong have intervened in the market to slow the pace of appreciation in their respective currencies. We'll be back after the break. You're watching Money Talks on One News. Okay, Jerry, are you with us? Hope you can hear me again. We had some issues. I can't quite hear you yet.
Hear me?
There, I can now. Okay. We'll be going straight to you as we finish the break here. All right, thanks for the wait and apologies for that.
Thank you.
All right, we're good, Derek. And just wanted to check on Mike. We could be back to back after Mike, no? There's just a bit of reverb.
Yeah, there's. Can you hear me?
Okay, thanks, Mike. Okay,
Sure.
I'll be with you both. Okay, Jerry Ngao joins us now live. He's the CEO of East West Banking. So let's pick up on that, Jerry, on the interest rate differentials. We've heard from Fed Chief Jay Powell. We've also heard before him our own Bangko Sentral governor speaking about his openness to 75 basis point of a cut.
Thank you again, Cathy. Good morning, everyone, and thanks for having me. I think the move of the Fed is not totally unexpected. I think a monetary response to what is essentially a supply shock is probably suboptimal at this point in time. And I think they are probably well in his ground to basically hold back and see how things unfold. There's just so much uncertainty at this point in time that to do anything is probably going to be suboptimal. So I think that's probably the right stance to take at this point in time. In terms of the interest rate differential, I think what you've seen is despite the interest rate differentials being where they are, we've started to see the global weakening of the US dollar, which is probably more with regards to how the global economic system is being affected by political ramifications. So I think this is probably more than just the global financial transmission mechanism playing out with what's going on in the economics versus what's going on in the political sphere. I actually think this could potentially pose a Goldilocks moment for a country which is inward-looking, consumption-driven, like the Philippines.
Right.
I think what is very interesting is that this could be our moment.
I was just getting to that. The consumers, I mean, there's a lot more purchasing power with a stronger peso. So how would you describe consumers these days, given slower inflation, not seen since the last midterm election of 2019?
Well, I think the consumer story, particularly what's going on with the election campaign being with us, inflation being muted at this point in time, really the commodity prices being affected with what's going on with the tariff wars is actually benefiting the consumers. And I think what we've seen is that the consumer story continues to be robust. This is driven by underpinning fundamentals with regards to the demographic age of the country and our relative safety net because of the fact that we are one low in terms of the tariff that's being placed relative to the rest of the world. Our exposure to the US market seems to be relatively limited as well. And I think the two or three variables coming together provides a very good moment for the Philippines. So I think may it long last. No, I think what also Governor Remolona is saying, basically considering interest rate cuts for the Philippines is also the right stance at this point in time. I think what you're seeing unfold before us is that the global synchronicity in terms of the financial transmission mechanism is probably starting to fray at the moment. And I think countries will have to find their own path on their own. And I think that's really good that we have a really independent central bank, which would also think about it in terms of what's good for the economy and where we are in terms of our economic development.
And that also puts you in a good place, just taking from the strong consumer theme, consumer banking, that business is so competitive, a space, as other banks have really been expanding their presence. So what are East West strengths that can help guard against the intensifying competition?
The space has always been very competitive, hyper competitive. And in fact, most of the competition that's coming in right now, not just between banks, but also between the fintechs that are coming in, the non-bank financial institutions that are coming in. So it's a really, really vibrant space. But I think it's really what the country needs at this point in time. We have been for the longest time underbanked, underpenetrated in terms of what's available for the general population. What we've seen happen is financial inclusion expanding, and that's really good. That's really good that that means that there are more people who are able to participate in the economy and not really just relegated to the top 10 or 20% of the population. So this is really good what's happening at this point in time. From our perspective, there's a lot of cooperation that we're doing with other banks as well as with the fintechs as well. Really, at the end of the day, I think that there is a time and a space where this entire demographic growth and consumption story can hold fairly well. Obviously, we will need to keep up the investments in terms of technology, in terms of capabilities, in terms of new products and services need to keep pace with the demand of the ever-growing, ever more competitive, but also demanding market, which is really good. It excites me.
I know. I can hear that and I can see it. So, what does that mean then for loan growth? What is your strategy for loans in the consumer space, especially with the increasing competition? Maybe say for teachers' loans. And how much do you see your loan book growing this year?
I think it's more a general salary loan. But I think what we've been doing is we're trying to keep loan growth at a steady pace. We're looking at around a mid-teens. I think loan growth, at least in my experience across the region, you do not do it in terms of start and stops, right? What's what gets you into trouble. What you really want to do is to be able to have a steady mid to high teens in terms of loan growth, coupled with capabilities and a focus on fundamentals in terms of cost to income ratio, lowering down the cost to acquisition, being more digital, putting more straight through processing, and so on. That's kind of how it should play out, right? At the end of the day, all these benefits should go back to our consumers. Basically, the hope, at least in East West Bank, is to look towards what I would call a risk reward curve, where effectively new to bank, new to credit clients are given the opportunity to prove themselves and then lower that interest rate as the relationship expands. So we're looking at steady growth, steady relationship, and basically making that work for our end consumers.
And like you say, yeah, the Goldilocks moment there. Thank you so much for joining us, Jerry Ngo of East West. And joining us now is Mike Enriquez, the president of Sun Life Investment Management and Trust Corporation, with assets under management worth 418 billion pesos as of end March. Good to see you again, Mike. Welcome back to the program.
Good morning, Kathy.
Yeah, Mike, your thoughts first on the peso and the Asian currencies in general, because some of the currency strategists have warned that the continued strength in the Asian currencies could spark fears of what they call a reverse Asian currency crisis with potential ripple effects in the bond market. I mean, you've just heard Jerry say there that there could be some form of a decoupling, but I'm wondering from your end, what are you thinking?
Yeah, so it was really a regional move on strengthening of the Asian currency. So it's not just isolated to the Philippines. And I think this is really more because of the reaction from the uncertainty in the trade war, especially weakening of the US dollar, more than the strengthening of the Asian currencies. So again, that is really more of that as an effect of the weakening US dollar. But having said that, I think that's why the BSP now is more confident to say that they have more policy room to cut rates and widen the interest rate differential between the Fed and the BSP policy rate. But then again, I think we can probably see after the Fed's announcement last night that they held off on further adjustments. So meaning they are now more hawkish. So that's why there's an immediate reaction to the peso. The dollar immediately appreciated because of this, as anticipated. And I think we may probably see a correction happening soon with BSP becoming more dovish, Feds becoming more hawkish. So I think we can expect currencies in Asia start to correct because of this.
So dovish, meaning the Bangko Central cutting on June 19th?
Yes, the Banco Central definitely will cut. That's our view for our house view that they will proceed with cutting. I think because inflation was really surprisingly lower than expected from April. So I think there's a lot of room for them, and it definitely helps the economy as we continue to have elevated interest rates up to now.
Talking about the economy, we're just about 5 minutes away from the first quarter GDP numbers. What are you gunning for, and how do you think that might affect your asset allocation for, say, the second quarter and the second half of this year?
Okay, our house view is about 5.9%, slightly higher than the consensus of 5.8. And we believe that the major driver for this is really the revival of personal consumption. And I think it's being shown as well in the first quarter earnings results. We've seen some of the consumer names, especially non-discretionary consumer names, improve double-digit income growth year on year. So I think it's really consumers starting to really pick up, becoming more confident right now in spending.
And in an election year, I mean, it's often seen as a windfall for consumer companies, much more if inflation ends up slowing faster than forecast, which it did. So what positions have you made or are you making on consumption-driven assets in your portfolio?
Well, right now, we admittedly, it's still the cyclical ones. The banks continue to enjoy the largest portion of our allocation, given that I think they continue to enjoy huge net interest margins. But I think we're slowly looking at some of the consumer names, such as Wilcon, CNPF, URC. I mean, all of these companies have been showing good signs of recovery from previous years, shortfall in their target. So I think overall, if we continue to see the trend that inflation continues to be steady, or even lower, then sentiment will definitely improve from the consumer side.
So is fixed income still attractive in the second half, you think?
Well, definitely, as the BSP continues to be quite dovish, although they're on the short end of the range, we expect the long end of the range to probably adjust lower as well. In fact, right now, the 10-year is still being driven by higher U.S. Treasury rates as well as more supply from government. But nevertheless, I think there's a lot of liquidity in the system looking at deploying into longer term just to be able to catch the last wind of high interest rates. So I think overall we expect probably the 10-year government bond yield to adjust lower by at least 50 basis points.
Got that. And you're 5.9% tipping for the GDP figures in just a few minutes. Thanks, Mike Enriquez of Sun Life Investment Management and Trust Corporation. Smoke billowed from the chimney atop the Sistine Chapel almost 7 hours ago at 3 a.m. Manila time. This means no cardinal gained the necessary two-thirds majority to be elected pope. 133 cardinal electors entered the chapel for the secret conclave. Before the balloting, cardinals held a mass at St. Peter's Basilica and took the oath of secrecy inside the chapel. Cardinals are prohibited from leaking any conversation during the conclave, or they will be handed the punishment of excommunication. After the oath, the doors of the chapel were closed, signaling the start of the conclave. All electors temporarily disconnected to the outside world. No phone calls, no email, no social media. It is now almost 4 a.m. at the Vatican City. You are looking at a live shot there of St. Peter's Square. 4 rounds of voting will take place daily until a pontiff is chosen. According to the Catholic News Agency, voting times occur at 4:30 p.m., 6 p.m., 11:30 p.m., and 1 a.m., all in Manila time. Stay tuned to One News throughout the day as we bring you the latest on the Papal conclave. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.